All right, beauty. Good morning, ladies and gentlemen. Welcome back to another Sharewise webinar. My name's Harry McCaskill, one of the senior advisors here at the firm. Today, we're very lucky enough to have Grant Straker at our helm and having a little bit of an interview, with him regarding what's been going on behind the scenes with STG. I'll let Grant introduce the business, but the way we operate today, a little bit more of an interaction, interview and Q&A style webinar, so it should be good. Gives everyone listening the chance to, ask those questions that you've been wanting to ask and know a little bit more about. So feel free, don't forget to ask questions. It's your chance. It's the reason we're doing it. So Grant, thanks for your time. I'll let you introduce the business and we can get straight into a little bit more of an interview.
Thanks, Harry. Yeah, great to be here. So, Straker is a AI technology company, and I know that AI is widely used as a way to frame companies. But look, we've been doing it for 15 years. Our initial business model has been around translation industry, and we were the first company to pioneer machines and humans working together in around about 2010, 2011 in the translation industry, working with very early AI models. And that led on to when Google released the Transformer AI model and the world changed. We were very early experts in that. We grew pretty much rapidly through that sort of 2011 period up to the sort of COVID times, I guess, with a mixture of organic and M&A up to where we are today, which is a sort of mid $40 million revenue company. We're profitable. We have around about 12 million cash in the bank. We generate free cash. 10 offices around the world with around about 170 staff. So we have global reach, and we have channel for our innovation, and we've built an amazing set of AI disruptive products that we're releasing out to our customer base.
Wow. So you mentioned you've been around for about 15 years, correct?
Yeah, well, this company itself has been around about 25, actually. But for the first 10 years, we built content management, technology content management solutions. And we built them for companies that needed to have multilingual solutions like Tourism New Zealand and some large corporates, the EU, and some large US corporate base. And so as part of that, we built some translation workflows, and then we looked at the translation industry and we went, wow, this is a huge industry that could be disrupted as very early sort of Google Translate, I guess, came into play around about that 2010, 11. But in its current state, yes, in the sort of current market that we've been working in, that's around about 15 years. Yeah.
15 years. And I mean, obviously the AI and technology space is a lot of competition, right? That's everyone's trying to crack the market and do something else that someone might not be doing. What would you say your strategic advantage is in the language technology market specifically, and just continuing to develop new skills?
Yeah, so I think one of the keys to our unique proposition is a lot of the data that we had. So when I go back to that 2010, 2011,
Yeah.
what we did was we built a platform that was in the cloud when everybody else was using tools that were on a desktop. And because we built it in the cloud, we could see that we needed to collect lots of data assets. So we have 15 years worth of curated data. We're very accurate, and so we're able to now train models using that data. And that's starting to produce some amazing results and giving us some access into some unique verticals with AI solutions.
Yeah, beautiful. And I guess looking back and I guess where the business started, where it is now, what do you think's been, the most beneficial, most profitable side of the business?
Well, I think ultimately it's our ability to bring efficiency to our customers.
Right.
So we're all about, you're in an industry, particularly in that language industry, that has a lot of legacy players very locked into the way they work, very locked into process and slow to change because they don't have technology. So it's been our disruptive approach. As I say, we were one of the first to do what they call post-edit, which is machines and humans.
Yeah.
We've just released our Verify AI Verify product. This is a leader in basically reimagining how this industry can work, and it's a big industry. It's sort of 70 billion, $80 billion industry. So there's a lot
Huge.
of
Massive.
revenue and projects already floating around. Um, so our view is that AI needs verification. Not, no, so you won't translate anything, or you'll verify that the machine has produced the accurate outputs. And so to do that, you build quality estimation engines using AI. And these quality estimation engines take a human out of the loop so they can estimate the quality of a translation very accurately. And then they can decide if it gets a low quality score, maybe it does need a human review or maybe it doesn't. And so by removing a large portion that a human needs to check, you start to drop the cost and you start to speed things up. It's really reimagining how the whole industry can work.
Yeah, and I saw that obviously head office is in New Zealand. That's where most of the research and development is done. I guess in terms of the research and continuing to develop new AI models and I guess the speed and efficiency of it all, how cost effective is having a head office in New Zealand, or is there opportunities to move to other countries regarding the R&D?
Yeah, so we have a bit of a split. I mean, we do have an office in the Philippines. So we probably have about 25 people, I'm going to say, in the Philippines. They're not developers per se, but there are, support services and technology support services and things that we have in that market. So that lowers the cost. In terms of New Zealand as a cost-effective market, it is a cost-effective market. Developers here are very good, but probably not at a premium that you might pay, say, in Sydney or in Seattle or anywhere else that you might go in the world. So
Yeah,
and obviously what we get here is that we can get all these developers working in the same room, doing the same, yeah. So you're getting this cross-pollination of ideas and thinking, and they're working with, say, a marketing team that's here. So it is a very cost-effective place. I mean, our OpEx is as a percentage of our revenue has been dropping down. So we are getting a lot of efficiency.
yeah, for sure. And we just had a question come in, and I've got a few of my own, but obviously want to make sure we're touching base on those listening. Ronan, just looking for an update on the SwiftBridge AI initiative in Japan. And just to elaborate on that, how many companies in Japan have already engaged with STG?
Yeah, look, so I'll just preface this is that we've actually just finished our financial year. We're a March 31 financial year, so we don't release our results till next month.
Right.
Uh, so look, we've had so again, I'll have to be careful about what I say about our results or where we're tracking. Our SwiftBridge AI project is going very well. Had a lot of engagement, a lot of initial success, I guess, with it. And this is a project where where the Tokyo Stock Exchange has mandated that every company on the exchange has to do their releases in English and Japanese and English.
Okay.
We have trained a specific model. We have a language model called Turi that we've developed.
Makes it
Where
quite easy.
yeah. So we've released that, and it's basically trained on financial data for Japanese to English. And it solves a lot of the problems that these companies need. And we've signed up a partner up there, Guasu, who is a technology reseller, and has relationships with most of the large listed companies that are on the exchange. Um, and they are now actively working through, there's about 2,000 companies on the exchange working through a list with their salespeople. And I think they have about 80 salespeople in Japan. So that initiative's going well, and it shows, I guess, the value of a vertical approach. But what it's showing us with our Tiri model is it takes about 50,000 segments to train a model to be better than anything you will get from a large language model, a generic model. And so I'll go back to all the data assets we have. We've worked in financial services in Japan for the best part of that 15 years.
Yeah.
We've always had a group up there called the Financial Services Group that's dealt with large banks and financial institutions. And then it takes about another 10,000 segments to make it very vertical specific. And so most customers would have that data. We have that data. So we can actually also train these models to be really customer specific. And so that is where you see results that you can't get any other way. Yeah. So it's going very well at the moment. Yeah.
Beautiful, Ron. Hopefully that's answered your question. He also sort of follow up as well, and something I would be curious on as well is there any revenue and forecast expectations over the next 12 months with SwiftBridge, or what's your take on that?
Look, we certainly, as I say, we won't release our results or give any type of guidance until we release those
Yeah,
results or look
understand.
at what we do. I mean, it's yeah, certainly we do have expectations. We've made some investments. It's not the only vertical play that we're looking at. We have a number of exciting things going on, and I think a lot of our activities that are going on are based around the fact that the world is changing rapidly and content flows are changing. So one exciting thing for us is that we see people plugging large language model translations into platforms everywhere. You just see it, Adobe are doing it, you name it, somebody's plugging it in. And initially people would be like, well, that's a threat to your business. But ultimately what it's doing, it means somebody else is solving the process flow of translations. They're solving where the content comes in to get translated and how it goes out. And that's a setup for our verified product because translations often getting added as a premium service
Yeah,
into a SaaS tier. You know, you might have your mid tier and then you might have your premium. Translation, large language model translation becomes a premium, and our ability to add our verified product in there becomes a bigger premium. So we have a guy, Lee Constanti. Actually, he worked for us a few years ago, really experienced in the industry, based in on the east coast of the US. A very strong ecosystem guy. So his job right now is signing up platforms for our Verify, and that's his main job. I was with him and the team in Europe last week, looking at
yeah,
the. So that's a super exciting area for us, and I think probably more than any other, it would be our biggest growth area because it's the simplest, easiest um, way to get our product where there's lots of content.
yeah, beautiful. And just on the topic of, I guess, trying to crack the market. Um, Again, the whole technology AI space is always evolving, right? So outside of SwiftBridge, how do you continue to plan to, I guess, crack the emerging markets and anything sort of that is pretty dynamic?
Yeah, look, so I think one exciting thing for us, as I say, I was just talking about our Terry model. So we
Yeah,
developed our own. It's really a small language model that you can train specifically for customers. And this is something that we're seeing more and more customers are wanting us to do. They want to know that you can take their data, you can take specific data for their industry, you can train a model, you can tune it, and it will have some outputs for them. So I think the fact that we've had this sort of inbound request from customers around AI models, so that general consciousness to them that if we can develop a model that works specifically for what they need in that vertical, it's exciting. So I think that's one way that we see it. You know, and originally we weren't going to build our own model. Just originally we had a have an AI team, and their job was to evaluate what's the best model that we could use.
yeah,
And as they started to do that, we built a model so that we could have comparisons, and then we found out that we could actually build one better because we had better data assets and better experience
beautiful.
how to tune this. And the other thing I think that's very unique for Straker is we can validate our outputs on our models because we have, 100,000 humans signed up as freelancers who have always been inside of our platform. So we have a crowdsourced platform,
Yeah,
so we can actually validate our models to know they're accurate. So if we come up with something, we can use these humans. And I think that ability for a company to validate AI model output is going to be a market that's really going to take off because it's going to be such a needed process. And so we've already got it set up. We've done it for years. We have the billing set up. We know who the experts are. We've had all these
Yeah.
humans. So again, we see that as something that maybe sits on our IP that people don't probably understand, that we have all
Yeah.
of this value that's going to start to create more value for us, and may have a lot of appeal to other companies as well.
Yeah, and look, I mean, you look at AI in general, it's still very, very early on. And there's still a lot of niche markets that probably haven't been cracked. And with the ability to develop, I guess, language models, AI models as efficiently as you can, well, then, yeah, you're going to hopefully in the next 3, 5 years start to reap those benefits. And, it sounds like you're on the right track in that regard, that's for sure.
Yeah, no, absolutely. I look at, and I think a lot of our competitors will really struggle. The people that are legacy, people that don't have a technology play. I think in our space, maybe there's 10 really focused technology companies that have more developers than they might have production people or something.
Yeah.
Um, and and all of us, I think, are in the right place for an industry that has 20,000 players. If you look forward 3 years, it's not going to be 20,000 players in this industry. There's going
Yeah.
to be a large consolidation into the technology focused players, because I think AI will give you so much leverage in your business model if you go early and go hard on it. It'll be very hard to compete with that. And you'll be able to scale in a way we never could before. We could scale because we won't need production people and we won't need to keep scaling salespeople and these sorts of things. So yeah, it's super exciting. Like it's probably in all the years we've ever done anything. I think this is the most exciting period we've ever been in.
Beautiful. That's what we like to hear. That's what the shareholders want to hear as well. Now, moving on to a little bit more of a, I guess, a potential risk for the side of the industry as well. When it comes to the recent global economic conditions, with you've got tariffs and a few other things going on, but what impact does that have on your operations, your costs, any sort of client demands? Have you observed any shifts in the industry or any key risks there?
Yeah, I guess that's a double-edged sword too, right? Because what happens on one side is that you'll get tariffs and you'll get some customers who might be affected by those tariffs, but we might not be doing all the work for those customers. Often they split the work across a range of vendors and a range of technology providers. But what you see is when the pressure comes on, they're going to really want to get cost savings. So they're
Yeah.
going to start looking for people who have got a super efficient engine. So when you turn up and you say, look, we can build you a model that's going to drop your cost by 50% and also integrate in with these AI agents that we've built into your process, we can make things much easier. So I guess for us, we see a bit of opportunity there. Now we see customers still going well. Like we gave guidance for the last financial year, and again, it just finished a few weeks ago, between 43 and 45 million. I just spoke at an ASX event a few weeks ago where I said that we would be at the high end of that guidance. So customer orders and stuff are tracking well and opportunities. So yeah, so not too much. I mean, again, customer by customer, I guess it'll play out over the next 6 months to see really how much it affects them. But I do think there is underlying opportunity in that.
Oh yeah, so there's good and bad and everything. And obviously,
Yeah.
you want to adapt. And just still on the topic of, I guess, the global stage, what? And this is a question that's come through from Jono. Do you know how much market share Straker can attain regarding the global market?
Well, I'm always pretty bullish on this because I think that it is a huge multi-billion dollar market.
Yeah,
As AI starts to impact, it opens the door, and as I just spoke about before, when you can get operating leverage like you've never been able to get before, it opens the door to some rapid growth if you can get in the right place and you take the right bets at the right time. Um, so if you take that, like I said, you might go from 20,000 players into really 200 or something like that, and you slice that up, and the market can stay relatively consistent in size.
Yeah.
revenue, then there is some significant opportunities. And I guess there's a lot of talk about, well, will the price go down? Will the size of the market drop? Or will people just keep the same budgets and actually do more languages? Because technology makes it possible to do 20 languages and approach 20 different markets. Um, or what we're seeing is that we see some revenue streams changing from, okay, this is what we used to charge you on a content volume price, but actually now we're going to charge you for our model that we build. One of the things we did early on was we built a token billing engine. So we went full AI. This is about 18 months ago, to charge our customers on a token basis, on the AI tokens. And so again, we see that there's just this shift away from the way that people would have paid to what they pay, and that'll open up opportunities for new sort of business revenue streams,
Yeah.
product lines. So yeah, so I think there is a significant opportunity if you happen to be the one that really nails it early, and I guess that's what we're trying to do. We've got the balance sheet to do it. We've got the distribution already set up. We're profitable. So, it's going to be exciting as we sort of deploy some of that over the next 6 months.
Yeah, beautiful. And then again, it's one of those things. If you get in early enough and you establish a foundation, and that consolidation does happen, well, the sky's the limit in terms of market share. How long's a piece of string, right?
Yeah, yeah. I mean, there's always complexity, but this is what comes back to my earlier point that when people start solving the content process flow, they've taken a
Yeah.
big chunk of the friction out of you getting rapid market growth. And so that's why I'm quite excited by every time I see large language model translation plugged into a platform.
Yeah, beautiful. Jono's just followed up and he's just asking if you can talk about Foxit as a customer on any level.
Yeah, sure. Look, so we have, again, I just come back to the ecosystem story that we were talking about,
Yeah.
getting into ecosystems. So if you look at how we could grow, getting like if you wanted to add 50 million of revenue, for example,
Yeah.
and you want to do it with $1 million customer, you'd need to find $50 million customers. And those sorts of deals take 6 to 12 months, and they're hard work, and there's lots of corporate complexity and everything else. But if you wanted to get 500,000 customers that pay you $1,000
Yeah.
um, a year, then when you look at these ecosystems and you see companies, that have 50 million users, or some of these really large ecosystems that have a really significant number of users, then it becomes feasible that if you can integrate into them and add value around what they do, that you could get that type of metric. Or similar with SwiftBridge, where it's more of a 10,000 a year type customer, 10 or 20,000. If you can find 5,000 of them, now there's 2,000 potentials on the Tokyo Stock Exchange. There's another,
Yeah.
there are about 20 stock exchanges around the world that may see value in this solution. It becomes feasible. So that's the value of a Foxit partnership. They have a lot of users, and those sorts of, again, 700,000 users just on their legal eSuite product.
Yeah.
So, it passes the sniff test of how you can rapidly grow.
Yeah, I guess you're just trying to figure out, which potential customers in there are actually worth your time and I guess your resources as well, right?
All it is, and it's also a change. So, again, I was just talking about Lee Constanti doing our ecosystem play. One of the things around the ecosystems is that there's lots of different new processes happening, like AI agent processes, things like N8N, which is an AI process engine where a lot of people are plugging in to use that. So content's going to flow through there. So how do we partner with them? I think Lee was trying to sign up 100 partners in the next 6 months when I was talking to him last week. So that's a pretty
Right.
bold target, right?
Huge, yeah.
Um, Now he's got to be able to do that, and whether they'll all be activated in that period of time, I don't know. But I do think we have a very strong product market fit with our verified product. So when we talk to people, they listen to what we're saying and they're interested, and so you get into that sort of mix of okay, what's the next steps to make all this happen? But that's the kind of targets that we're aiming for.
Yeah, beautiful. And I guess just on the topic of that growth, and as we're just sort of talking about, when it comes to the business and your operations, is an acquisition, is that something you'd ever be looking at or currently, thinking about? Because again, if it goes well, it's always a good way to, I guess, capture more market share just by acquiring, another business that can just add more strings to your bow, right? Is that something you've thought about?
Yeah, look, I mean, we get lots of, again, this is an industry in disruption. So lots of legacy players want to sell right now. I get a huge number come through, and it'd be, what are you buying right now if they don't have technology? So
Yeah,
there is a trade-off. Like we looked at one company that built these quality estimation engines about 12 months ago, and we're looking at their technology, and we were thinking, right, they have a lot of data, they have some of this technology. Should we buy them to speed things up?
yeah,
Now, as it happens, we've developed a better version than they had ourselves. So,
right,
um, so we, had we bought them, we may not have got the value that that we might have got.
yeah,
So I think we don't write off acquisitions, particularly if there's a technology side to what's going on. But I would say that investing in organic growth right now and some of these channels that can give you a network effect may
much
in the long
more
run be
profitable.
far more capital efficient way to grow.
Yeah, much more profitable as well, I would imagine, in the long run as well.
Yeah, and without all the complexities of integrations and
Yeah,
humans and trying to just culture and all those things
yeah,
and a
of course.
distraction becomes a distraction from
Yeah.
doing what you do well.
Now, you just mentioned the word culture. I had one question on that. Given you're operating in 10 different countries, offices all across, how do you make sure everyone has the same level of motivation, the same, I guess, mindset towards getting Straker to where you want it to be? Because it is hard, right? You can't do everything, right? Yes, it's that you're using AI models, so it takes a little bit of human element out, but you need people on the same page, otherwise the business can't grow, right? So how do you make sure and maintain that efficiency within the business and the people working there?
Yeah, that is a very fair question. And I think that we've done this for a while around with the team. So part of it is interfacing with people. So I've just up in Europe last week, seeing the team. I got a few of the team over from the States as well, so that we could get people in the same room and talk about stuff for a few days and plan out. Uh,
Yeah,
See some customers, hear some experiences on the front line as we look at our Verify AI product and just hear what customers are saying and seeing. So that sort of steady engagement, I think is one thing. What I'd say is at the moment, we've got a bit of mojo back in the team. I think for a year or two, when you're going through these big AI disruptions and
yeah,
you'd kind of after the back end of COVID, people do drift a bit. They sit there and they want a bit of excitement. But because we've had some new product releases and we've had some excited customers, things like SwiftBridge, you've got some momentum. It brings a bit of mojo back in. So people start to look at us internally, the staff, and go, right, I'm in the world of AI. What's going to happen? One thing we're doing internally is we're saying, well, we've been quite open with a lot of the teams. AI agents are going to replace a certain number of jobs. If you're in this role,
yeah,
might not be a long-term role. So if you want a more of an AI product role, we're going to recruit for some of those people. Do you
yeah,
want to come over? Do you have the wherewithal to be able to do this? Can you train yourself and do that? And so again, it just gets some excitement back in the team. Um,
beautiful.
yeah, and at the moment it is a time where you do need to have a fair few team members flying around and just engaging with each other and making
Yeah,
sure
definitely.
you're hearing from customers and seeing the teams and getting
Yeah.
excited about what's happening.
Yeah, again, that motivation is key there for the long-term success. I would definitely agree with you.
Yeah.
I guess one more question. We've got one more from Jono, and then I'll wrap one more up as well. But Jono's asking, grants, you've mentioned that the internal target is 100 plus partners in the next 6 months. How many partners do you currently have, and what kind of average annual value could that attribute to?
Um, Yeah, look, I don't have the key partner number in front of me, but
Yeah.
look, we do have a number of partners that we've talked about in the past. It's probably closer to a 5 or 10 sort of, partners that we've worked with. Um, so look, I think that we know, and again, when you're reimagining a business, trying to get into hey, this many, this number, this is the size, this is the value, are things that you don't know because each partnership's going to be slightly different. I think each one we will probably, well, what we've done is we've done an initial evaluation to look at the size of each ecosystem,
Yep.
look at the kind of cost of acquisition into that ecosystem, and made some assumptions on who we should approach to try and partner with.
Yep.
So yeah, so I think over the next sort of, as I say, 3 to 6 months, we'll start to evaluate that. And again, that's a real aspirational target, right? Like if we got 50, I'd be pretty happy. To be
Yep.
honest, if we got 25 new customers that were activated, it's probably better than 100 sort of signed up. So I think what we'll try and report as we go forward is around activated partners that we've got. Some might only produce $100 per user, but maybe there's just no overhead at all because of the automation
Yep.
that's coming in. And then and also it might be very, very high margin um, business. So yeah, so I think it's an exciting thing. I think we want to talk to our shareholders and um, around the fact that, look, we've got these targets. This is what we're trying to achieve. World's pretty dynamic. There's new companies getting created right now that we don't even know about that are going to be potential partners as they start to win. So as you start to get winners in AI, I guess we want to be riding on the coattails of some of those that start to get
Yeah,
big
of
customers,
course. Yeah,
generate a lot of content. Yeah, that we can.
100%. Now, the question I always like to wrap things up with, and conversations I'm having with managing directors and CEOs is always, if there was one message you'd like to convey to current and potential shareholders moving forward, why do you think they should become or maintain as a shareholder of the firm, given Straker's future prospects and just current stance in the market?
Yep. So I think there are three. Well, there's a few things that are worth people considering if around becoming an STG shareholder. So one is, we're in a very solid financial position. We generate cash. We have cash in the bank. So we're in a very solid financial position. The second thing is that we have amazing innovation. We have real, true AI innovation, and it's hard to buy. When I looked at it in some of the ASX presentations that I've done with other companies, there are not many AI companies, true AI companies that are building models like us, etc., that have done this for a long time that you can actually buy into. Most of the AI companies are either private right now that are out there, or they're the Mag 7 type companies, right? So
Yeah.
actually being able to buy into an AI company at a just as a retail investor, it's just something I think that we offer that's unique, and we do have incredible innovation. And the third thing is that we already have distribution for our innovation set up. So, we've got 10 offices around the world, we've got salespeople around the world, we've got whole customer networks, and obviously we're starting to build up these partnerships off the back of our innovation. So I think, if you're looking at a recipe for a great cake, I think we have, all the great ingredients, and we're ready to go.
Beautiful, Grant. That's yeah, very, very exciting times, like you said. This is one of the most exciting times you've seen in the industry for, especially for yourself in the last 5 years or so. So we really appreciate your time here at Sharewise. I know you're a busy man, you've got a busy schedule. So we do appreciate it. And hopefully everyone listening, you got out the questions you wanted, and you've, I guess, got a little bit more of insight and direction as to where Straker is going. But Grant, again, thanks for your time.
Cheers, Harry. Great to be here.
Beautiful.
Thanks for having
And
me.
again, everyone watching it is recorded. So if you do want to rewatch it or send it around, it's on our YouTube channel. I'm sure Grant will put it on their socials as well. But again, my name's Harry McCaskill, one of the senior advisors here at Sharewise. And till next time.